Welcome back to Bazaar Morning Call. It's the last day of the week and we have Gurmeet Chadha of Complete Circle Consultants joining in now to tell us how to prep for the next few months. The month of June has begun and Gurmeet, thanks a lot for joining in. Welcome to the show. This year is going by really fast and give and take everything, it's not been such a bad year. I mean, so many stocks have come back in big ways. The market is virtually at all-time highs, which is a great place for the bulls to be. But from here on, how do you approach the market? What are the stocks that you still like? And what do you do now? Do you raise cash levels or do you continue deploying?
Thanks, Sonia. See, I mean, how many times have we seen that, right? All negative news, debt ceiling, inflation, everything. You have to be in it. I mean, if you just miss the 6-7 best days in the market, your returns for the year are probably reduced by half. And you probably, if you miss the 10 best days, you probably, returns. And there are so many data points to prove that historically. So I think, but the stance probably has changed. What we saw last year was a sell on rise. I think what we are probably witnessing, maybe I'm a little early saying this, is buy on dips. And I think the earning Q4, in my view, with the some exception of IT, was actually better than what everybody went in. And I think that's what has led to some. Plus, I think the FI flows have come back. So since 27th of April, I think it's been quite more than 30,000 crores of flows, which we haven't seen for a while. So I think that we should not ignore. My sense is that you have to be careful of valuations because the rates are still high. And I think and they're not going to come down in a hurry. You might see a little bit of a pause in the hiking cycle. So I think play the commodity consumers more. I think that's where you probably see, earning expansion and margin expansion. So cement, for example, Ultratech mentioned that March was 100% capacity utilization. Not seen that in a long while. Even Shree Cement pointed to high capacity utilization. So players who are debt free have the ability to raise capacity. If volume growth picks up, are something I think should do well. Maybe lower, you can look at something more mid caps like Sagar, Ramco, etc. Also, I think banks, in my view, will continue to have good momentum. I think the credit growth is strong, and what I'm most impressed is with this capital formation. If you see the Q3 GDP, Q4 GDP print, it topped off some 8.9% capital formation. So I think this investment cycle is here, and I've been making this point. These cycles are much longer. It may not be as ferocious as what we've seen in 2003-07, but this looks like pretty structural to me. So just be careful of valuations. I think don't just get carried away and just take it as it comes.
No, absolutely. Gurmeet, hi, morning. Yesterday we got news that Foxconn is going to be making in Karnataka as well. I mean, they've, I think, broken ground. They've already, of course, operated out of Tamil Nadu. Telangana, they've broken ground, and I think Karnataka, they're saying by April 24 they'll have operations up. So yeah, I mean, that make in India and manufacturing is, you're seeing that, I mean, actually, with announcements, etc. Gurmeet, I saw a tweet from you saying that you convinced your building security guard to start an SIP for his daughter's education. It was heartening to see. And I was wondering that the broader implications of what we are seeing, which is this increasing financialization, this can be with us for many years to come, right? There's this broad wall of domestic money, and we occasionally tend to underestimate it. But if that is a structural thing which is going to be there now, which was not there 10 years ago, even 5-6 years ago, I mean, then the way to approach things has to be very different in that sense. I'm not saying that it's going to be a one-way move, but it's an important trend, isn't it?
Oh, absolutely, Prashant. And, despite, look at NSE started at 1,000, we are at 18,000 plus. Sensex is 100 to 62,000. And we only have 3 crore unique investors in SIP and about 4.5-5 crore overall in equity. I was looking at some online gaming apps, cricket apps like Dream 11, etc. I have 11-12 crore users, unique users. We saw crypto users crossing 11 crores at its peak. We have 6 crore people playing online rummy and all sorts of games, and you have the best asset class, which probably. So I think probably this will grow, and that's the reason I think we have been constructive on, some things like CDSL, NSE in unlisted space, and you just play that. Look at the credit creation which is happening. Look at some of the niche players who are now doing credit creation, whether it is Equitas, Credit Access, Grameen, 5-Star Fusion, a lot of players, and people who had no access to credit. HDFC in its call mentioned that there are 45 crore people more which are still not part of the financial formalization in terms of credit. And I think that is coming from HDFC. So I think this trend is secular. Only thing, as I said, you have to be mindful of players who grow very aggressively, right? And when they grow aggressively, initially you get valuations. So we saw that with CDSL. Valuations, just people assume that we'll just keep adding 1 crore users every 6 months. Only thing we have to be just careful is valuations, as I said earlier to Sonia also, and just play it more structural. And expectations have to be more moderate. I mean, it's just that we can't just make money month on month and quarter after quarter.
Okay, got to be patient. That's the name of the game, and that's a commodity that's always in short supply these days, isn't it the case, Gurmeet? Stay on. We'll have more questions for you in just a bit. Our conversation continues with Gurmeet. Gurmeet, so let me ask you, let me throw the floor open. The earnings season is sort of completely done. We had a good string with some pharma numbers. IT was a bit of a wobble at the start, but you tell us, any one or two stocks that really stood out for you where perhaps, you might do some more homework, where you can actually think of making fresh allocations?
Two or three pockets should be. One, I think, the high-end spending, tourism, including luxury retail, continues to do well. We've seen that globally also, with LV probably crossing 500 billion market cap. I think so. The growth momentum continues. If you see the numbers for Indian hotels, Lemon Tree, very strong. Lemon Tree actually almost doubled and have a good pipeline, good mid-market segment to play. Average tariffs are up to 5,900 now. Occupancy has gone up to 75%. And I don't see this trend really. So I think there will be earnings momentum. Obviously, valuations have caught up and we have to be a little mindful of that. So I think that's one pocket, in my view, will continue to do well. We have G20, Men's World Cup, a lot of events also. And even the corporate travel has picked up. Second, I think the focus should shift back to rural economy. I think that's where we are seeing some bit of stress. So even if you see the GDP data, it was the personal private final consumption which was lower in the entire print. And with so many elections you will see. So I think segments which haven't done well in rural should come back to focus. So I think tractors is one segment I'm keenly watching. We have to see how El Nino plays out. Hopefully, I think that should not happen. So players like M&M, good numbers, but because they had a higher auto mix than tractors, the margin slightly came down. Very reasonable valuation still. More niche player being, let's say, VST, which is, if you see the power tilers, they are like almost 50% of the sale. They have good market share in the compact tractor segment. And they've given a very good guidance for next 3-4 years. So I think that's another... So some of the pockets, I think, is what we are focused on. And as I said, I'm a firm believer that, the capex cycle, we are in the early stage. So you have to play that through, cement, some of the EPC names, etc. So I think these are the three segments we are concentrating more.
So since we're talking about tractors and auto sales, etc., I wanted your thoughts, Gurmeet, also on Eicher Motors, right? I mean, Royal Enfield has been doing very well. Of course, the only concern is because of the terrific performance of the Hunter, their blended margins could be under pressure for a while. But be that as it may, is this a stock that you like?
Oh, I mean, we like it for a long time, Sonia. But it's just that I think the current valuations probably leave not much comfort in terms of incrementally adding it. And as I said, the high-end spending continues to pick up. The premium bikes, continue to well. We like TVS more. If I take the broader two-wheeler space, I think if you see they also in May they have grown numbers. If you see their ASPs have gone up. So the mix is very nice with 125cc and Apache adding to it. And then you have iQube, where they're already clocking 15,000 units. In fact, they mentioned that they want to ramp it up to 26,000 units on iQube. And I think they have one of the best EV portfolio. Other than iQube and scooters, they have very good launches over the next 12 to 18 months, which in my view is very, very important because they still have lower market share than the larger ones. And that we could see some, 10.5, 10.6% margins. They've been coming in double digit. I think one problem with them was capital allocation and low margins. I think that's coming back and still like 24, 25 times. So it's not really high end of the valuation. So that's something we like more. Over currently in terms of relative valuations.
By the way, Gurmeet, we have one of your not portfolio companies, but a company you like for a long time joining us today, PI Industries. So in about an hour or so, we'll be speaking with them. Just coming back. Gurmeet, just to spray you with some names, and you can respond or not. But I'm just amazed at the amount of action we are seeing in small caps. And I was making this point earlier that there is a broader market vibrancy is just astounding. SL Propack, EPL, for example. I think it's from your part of the country. I mean, erstwhile my part of the country, but it's been doing very well. Sobha continues to run after numbers. Something like a Cyient is up 80% this year. Just amazing, the run we've seen. PNB Housing last 2 days has started to run up. Some of these textile companies, right? Look at Himmat Singh, Indo Count, Gokuldas is back above 400 kind of levels, doing very well. Nuclear Software, very small company, but it's basically doubled practically, very fast. Any thoughts, any of them on your radar?
So, Prashant, I think if you see the broader price action in small and mid cap, it does suggest that the sentiment has changed. I would not say that we are in a bull market and all, but definitely the sentiment has changed. We track a few of them. You mentioned Gokuldas Exports. We met the management post the earnings. Despite US being flat, and he was talking of getting already orders for spring next year. Right, so the supply chains are changing, and people want to plan in advance. I think the MP unit should add to their productivity. You made a very interesting point that absenteeism in MP is 2% versus 9-10% in Karnataka and Tamil Nadu, and that makes a difference. So this is in these kind of businesses, your productivity, efficiency, and it's been a great turnaround since these guys took over in 2018. The only probably overhang is whether Clearwell sells more stake after what they did in March. So probably this will be more back-ended. So I think one key trigger could be the UK treaty as and when it goes through, but getting a lot of inquiries. A lot of CDMO names. We saw, Syngene report good numbers. Look at the way Newland has come up, very lumpy business. And I've been making this point on CDMO that this is a molecule. You have to take it molecule by molecule. And when the movement comes, it makes up for 2 years of non-movement. We've seen that in Laurus earlier during, the COVID days from 70 to 700. Then, it contracted significantly. Same happened with Newland, went almost below 1,000. Now, it's almost 3x from there because they are likely to commercialize 1 or 2 molecules. So I personally think this outsourcing pharma opportunity is big, and you have to play it through a basket, a small part of the portfolio, and just leave it aside for 4 or 5 years. So Laurus, for example, just acquired something, more stake in Immunocity, which is into CAR and gene, cell and gene therapy. And the commercialization will probably start in FY25. So these are the kind of businesses you have to bet for future. And look at pharma, just 3% of Nifty in terms of weightage. US is probably 15%. I think it's very, very underrepresented as far as the weightage is concerned.
Okay, pharma is a space that Gurmeet has liked, and he's spelled out some of the names as well. Gurmeet, always great talking to you. Have a fantastic Friday and a great weekend, and we look forward to connecting soon.